What does LeBron James think is the most dangerous word in investing? Ready? Again. What does that mean exactly? Well, it won't happen again. I lost, but I can earn it back again. Or perhaps athletes' biggest struggle: I can defy the odds again. The truth is, unless you understand and prepare for risk, it can wipe out any plan, even in NBA superstars. Jedediah Collins here with the Money Vehicle Movement podcast, where we're trying to make financial literacy more current and possibly even a little cooler. Today, we're unpacking LeBron James' approach to financial risk and turning it into a playbook any pro athlete or even you and I can use. LeBron is one of the rare athletes who's played the long game with his money, as well as playing the long game with basketball. I mean, damn, 22 years, that's incredible. But the headline today is simple: avoid risk that you cannot recover from. We're going to break risk into 4 different buckets. The first one is the risk of ruin. This is identified as risk capacity to your plan. You cannot take on risks that can permanently set you back. The second risk is concentration risk. Too much in one deal, one person, one industry, or even one income. Risk number 3 is liquidity risk. If you have $1 million on paper but no cash flow, well, you're still at risk. Forgetting that you need to live and have a burn rate, that's a problem. Risk number 4, and one we are learning more and more every day on social media, is reputation risk. Money tied to your name, brand, future deals. This is the modern day of NIL. Everybody walks around with a name and a brand that they are associated with, whether they admit it or not. That's why I talk to business athletes identifying themselves as business first. But even if you're not an athlete, you are still a walking, talking, breathing brand of your own business. LeBron's posture is not to never risk money. He understands that scared money don't make money. But the principle is never risk the foundation. Let me repeat that: never risk the foundation. That distinction matters. Let's start by addressing that risk number 1, the risk of ruin. This is anything, if it were to go wrong, would end the compounding of your money or destroy the plan altogether. For athletes, that could be personal guarantees on a big private deal, over leveraging in real estate with floating rates. Everybody says I can buy a building with no money or little money down. Well, over leveraging is a massive risk. Putting 7 figures, that's $1 million, into a friend's startup with no governance or oversight. Those are risks that can take you down. LeBron's model says risk number 1, if a bet failing means I can't play the next financial season, I'm out. Translation for you: protect the core. Your emergency fund or cushion account, your retirement assets, and a base of quote-unquote boring diversified investments. You're going to lose games, but nothing should take you out of playing the next season. You can take greater risk, but not with the core. Don't risk the core. That is, you can take risk with expendable money when we get there. Rule number 1, associated with risk number 1, before you go out on an edge, make sure your foundation is solid and strong. Risk number 2 is that concentration risk, and this one's where it gets exciting. The idea, one deal, one building, one opportunity can change your game forever is intoxicating. But concentration turns you from an investor sometimes to a speculator or even a gambler. When everything is riding on one thing that is outside of your control, it can feel a lot like gambling, throwing and rolling the dice. Balancing concentration with barbell thinking is going to be how we reduce this risk. On one side, safety and broad diversification. We discussed that through index funds, bonds, core real estate, or even having cash on hand. On the other side of that barbell, you can start to have selective asymmetric bets. I love this word, and it's an introduction for many. Asymmetric means your exposure to risk is significantly lower than the potential for return. This can be taking a stake in a venture fund or a small slice of a startup or a minority position in a team or real estate deal. Take asymmetric investments. They are uneven, but they tilt into your advantage. Rule number 2, to reduce the concentration risk: no single decision or event can threaten the next 10 to 20 years of your plan. Investing risk number 3 is liquidity risk. Liquidity is the ability to turn your asset into cash, and liquidity risk is when the highlight reel, your assets, are on paper but don't pay the bills of cash flow. You want to cash flow and cash grow. The flow is cash flow from the safe sources to support your daily needs, but not stop your compounding. Again, what is your burn rate? What is your runway to cover that burn rate? And that often should be protected in secure things like treasuries, short term bonds. Rental income is an excellent one, or coverages from dividends and ETFs and index funds. Again, cash flow. On the flip side, you do want cash grow. You want that equity, that asset, that investment, a long term horizon, thinking like an investor in decades, not days. You will see the growth through market cycles, but the compounding doesn't stop. And that brings us to rule number 3 to address risk number 3. Don't be cash poor. Don't be cash poor with a rich portfolio. As we wrap up to risk number 4, reputation and brand alignment. Your network is your net worth, but today, your name is your yield. Every business athlete, which is everyone these days, must know their brand. Truly, every individual should know their own value. I like to identify a brand in 3 words. For Jedediah, my 3 words are hard worker. Very few are going to out hustle me. Authentic, for better or worse, you're going to meet Jedediah. And I'm a creative, something that I hid for a long time. Hardworking, authentic, and creative is how I would identify Jedediah Collins. Your brand should influence who you choose to collaborate with. Deals that don't align with those 3 words in your brand or your values can cost your future and campaigns opportunities in future partnerships. We can see this from recent cryptocurrency, real estate, or just startup deals that have gone wrong. LeBron's playbook, who has stayed pretty true and pretty pure, is careful about who he partners with and what he is endorsing. Before you put your name and brand on something, know who's on the cap table, who are the other owners, who controls the brand story and the message going external, what's the exit or liquidity plan, and what's the downside headline if this thing goes wrong. Rule number 4 to defend against risk number 4: protect the name on your jersey. Your name is your yield. Let's summarize these risks into actions you can take. LeBron inspired framework: you can copy the protect the foundation with 50% of your investment portfolio going into core assets. 30% are then going to be riskier things that you invest into. That's real estate with fixed rates, uh, different businesses, different ways. But then 20%, 50, 30, 20, 20% is going to be where you take strategic ownership. This is where the real wealth can be created because you're taking on the real risk, but the foundation stays pure. As you look at any deal, make sure you look at number 1, you can survive if the deal goes south. And number 2, you have done your due diligence. Those 2 gates are going to be immediately important as you look at investing. The last and obviously not least is going to be vetting out that A team. Make sure your agent, advisor, accountant, attorney, and everyone has clarity and transparency on what you're going to do. The takeaway today is one rule you cannot break, according to LeBron James, is not to play scared, but it is to protect the foundation and keep your money compounding. Say yes to the upside, limit your downside, remember those asymmetric risks, and start creating your wealth. I'm the fullback of finance, and this is where sports and money meet. If this was enjoyable or interesting, share it with a friend, give it a like below, and make sure you tune in to the next stop.